Welcome back. It's Monday. End of the day. Quick check in on Misty. Misty, part of Group D, which looking here quick, YieldMax. They reported Group C last week, so it's Group D this week with Misty. And I guess just in other news, it does look like YieldMax is creating a new fund based on HIMS. So that should be upcoming based on the HIMS and her stock. Lots of implied volatility there. So probably looking to generate a pretty good distribution on that one, which is why I think they're doing it. But that one will be coming out. So I guess since Misty's coming out, I just want to touch base on that. What's positioning looks like. It's at the end of the day at about 336 a share, about right where this black line is. It has synthetics at 330, which is positive on that one, but negative on the 345 and the 410. It's quite a bit negative on the 410. But overall, as far as their positioning for positions ending the week, or I guess expiring the week of 9/26/2025, they're not going full just selling calls this week. They do got some credit spreads employed, as you can see by the options above the x-axis. But most of them, or does not look like they got a 100% credit spread. It looks like only a portion of what they have sold. But they got most of their calls sold at 360, the next most at 355, and then 365 and 370. The credit spreads are quite a ways out there, 380 and 385. So some slight insurance, but not a ton. I guess this is how they looked yesterday. So they did have the 370s and the 375. So it looks like they moved quite a bit of stuff around because they did have a 370 and 375 sold. Looks like they even moved that around. Yeah, anyway, that's it. Last time they had a 342 to 357. They had no calls bought. They just had everything sold. I'm curious why they had it. So they had a 370 to 375 sold. Now you don't even, now they just, I guess there was a 370, 8,000. Yeah, so they still got this 370 of 8,000 sold, which they had previously, or I should say Friday. They did have a 375 sold. They don't have that anymore, so it looks like they bought that back and moved it down a little bit, is my guess. So interesting that they wrote contracts that expired for this week and have even moved those, it looks like, down the strike scale. So I'm probably looking to generate some more premium, if I had to guess. But from a fund makeup perspective, the synthetic is negative, as we got that 410 out there. And other contracts right now, negative 16 cents. Valuation right now, negative 16 cent drag on the fund. And then from a synthetic usage perspective, I did say they do have a few credit spreads, 36,469 contracts. They have the ability to write 133,115 contracts, but they still have 23, almost 24,000 contracts they haven't wrote yet. So I imagine they did that today. Potentially that will update tomorrow. Show where those strikes at. Maybe they'll do credit spreads on those as well. But right now, of their total that they can write, they have a 28% credit spread approach employed. The rest is either unsold at the moment or just straight call options that are sold with no call option bought at a higher strike price. As far as the fund overall, clearly the market cap has fallen quite a bit. It was over 5.5 billion, now we're like at 4.6 billion. So basically like $1 billion. It has fallen. With the underperformance in strategy, the underlying equity. From a fund makeup perspective, I did show you, so you can see this, it shows you the ETF price at 4.5 billion. They got 4.68 billion in cash, but the synthetic and the other contracts are acting as negative almost 100 million for the synthetic and negative 45 million for the other contracts right now. I'm trying to think what else would be useful here. So that is how Misty is set up currently. I assume this will update. They're probably going to sell these 23,900 contracts. They'll do that today or they'll do it tomorrow to generate some more option premium. We'll see exactly what strike prices they pick going until tomorrow. As far as how they've been trading lately, let's see. So got to make sure I got all the dates selected. So I believe they paid their last distribution at the end of August. So I guess if you look at that time frame, probably in here is where they paid their last distribution. And they also used some additional cash to restructure the synthetic. They got quite a bit negative on them. So I guess all I can say is when they pay their distribution, they had $18 and change after they paid their last distribution, and currently they have $16.56 per share. So their cash positioning is down. Their synthetic's looking a little nicer than it was, being negative 35 cents versus when it was like negative $2.50 per share. But yeah, as far as what their distribution is, they haven't generated a lot of cash, clearly. Whatever they choose to pay, it will take the ETF price down, clearly. I don't know. I'm of the opinion they're not going to pay a very large distribution. They're going to try to keep the ETF price somewhat intact, and hopefully they'll get a rebound going into the future, which will shoot up the equity or the synthetic as well as the ETF price of MicroStrategy. You can let me know what you think. I guess we'll see on Wednesday. And then just looking at implied volatility. So I just did a 3S grok here. Implied volatility, what it's been over the last few months. You can see historically it's been quite low through the summer. Late June was 43%. July is 49%. August picked up a little bit to 56%, but right now we're sitting at 51%. I'm trying to remember what it was during the heyday. I think it was over 200%, if I remember right. So we're not at those. We're at pretty low implied volatilities for MicroStrategy or strategy. IV is low versus historical is noted. Or it says, so the monthly high was in August. It was down from earlier 2020. So even in 2025, it was at 140%. I believe that after the election, it was over 200%. I'd have to check that. But based on just implied volatility, I assume the distribution will be similar to what it was the last two distributions. So I guess taking a look at that quick, their last distributions, I think they've kept it above $1 a share. So if they keep it similar, and I'm guessing less, I guess it's in the 90 cent to $1 range. Maybe they'll give you $1 just to keep people happy, but I wouldn't even be surprised if it was like 60 cents. I guess that's just me. I wouldn't mind a smaller distribution to keep the ETF price a little bit higher until Bitcoin and strategy can rebound, which I imagine is upcoming. That's just my own guess, but I imagine, especially with gold prices going up, dollar coming down, rates going down, I assume Bitcoin has some room to run going into the end of the year. But that's just my opinion. Thank you for tuning in. That's an update on strategy going into the distribution announcement here Wednesday. Thanks.